Shavika. How are you? Welcome. We start at the top of the hour every day. Good morning, Alexander. Brock, how are you, my trading warrior brother? Everyone doing okay? Hope everyone had a good weekend. Good morning, Nikita. So a couple of ideas I have for this week is last week in NAS, we missed taking out this high. High of the move is 11,291. And we didn't quite take it out. Here the high is 274 and 269. So what I'm thinking is if the dollar stays squishy, which it is right now, it's not really getting creamed, that the NASDAQ could rally for a stop hunt above these highs. And I don't think the 4-hour, 2-hour, or 4-hour will confirm it. You never know till you get there, but just something I'm looking at here. And then when it comes to the dollar, last week I was negative Aussie. I still am. And actually, what it's doing here, this is what I'm kind of anticipating. I have some on from 71.90. Is that last week, if you could see this little candle here, the week prior was an inside range week inside the prior week where we made the high at 240. And so the most bearish thing Aussie could do, it's done half of it, is we took out last week's highs by about, I don't know, 10 pips or so. And then if we can take out last week's low, which was 71.09, that's 80 pips from here, you'll have an outside week to the downside. So that's what I'm looking for in Aussie. No, there's no guarantees it'll happen, but so, we could just keep going. But that's what I'm anticipating and taking a shot wrong over the high, say around 265 on that. All right. And let's see, the Dixie 92.50 double bottom here. So are we going to take it out? I'm betting no, okay, that we're not going to take it out. And I still think that we're going to get a bear market rally, maybe back to 95 to 95 and a half. Of course, we have to still get back over 94 for that to happen. Moving down to WTI, leave currencies, the rest of the currencies for the team. With indexes up, crude is lower. Thought there still might be a chance for crude to make a new high for the move, take out this high, which was confirmed. We'll see. I'm leaving it alone for right now. And metals were lower last night and came roaring back right here. I'm thinking there's, that this is still B wave, still could have more legs. What makes me think that there could be a pop in gold is when you look at the miners on that big down day in gold, they gap lower. Okay. So this gap lower, maybe we're going to work our way back into the gap with some gold strength in Newmont. And here's the ETF, GDX. Maybe work into fill the gap before we have our next wave down. So I wouldn't be pressing the short side of gold right here. Looks like rates are in for a little breather, but I still think what happened last week was significant. So we could correct this. I don't think we're going to go straight down to new lows. I still think that this is actually pretty bullish that we're pulling back, because a lot of people say, well, dead cat bounce, that type of stuff, dead cat bounce, and no follow through. So just because we don't get any follow through for a few days, as long as we hold last week's lows, still think 120 is viable in the 10-year rate picture. Maybe we get something like this. A little speed line and take it up there. Anyway, something like that. Okay. I've heard that Steve is out for the week, so I believe we'll probably have some of our team here with us this week. Next man up, like it used to be in football. So that any questions on anything that I've covered so far, guys? I know he's okay, probably. Don't be sad, Amira. Everything cool? What's SAG mean? Oh, silver? Well, you know, perhaps what's happening with China and the US, you mean fundamentals? That gold has entered a corrective stage. That's it. Those are my fundamentals. I would say that Blake would probably know more about will be the fundamentals, but I would say it's probably
Of what? Of what?
China.
I'm sorry, I missed it.
Oh, they're asking me, are there any non-technical reasons for being bearish Aussie? Maybe risk off might happen someday.
Non-technical. Well, you know, I think a lot of people might be worried about Australian growth. You know, resurgence of COVID. You know, with the reemergence of lockdowns. You know, and obviously the China U.S. trade situation that is obviously contentious. You know, is that going to continue to weigh? Is that going to continue to weigh on the Australian economy? So,
Okay.
you know, and then obviously you got to think about global growth too. I mean, with global growth markedly slowing down, you know, it's there's going to be less need for Australia's natural resources. You know, so are there any like reasons? I think you could, you know, have a good argument, macro argument of being bearish the Aussie here. Technically, though, I mean, it still looks pretty bullish. I mean, we've had a nice V-shaped recovery, but I could also argue that I think it's over. You know, it's like,
or at least due for a correction.
What's that?
And at least due for a correction.
Yeah, or
one.
yeah, maybe, yeah. I mean, you know, and we'll take a look at those charts here in a second.
And it'd probably help if Aussie Kiwi, which is still on a tear, would reverse, would build the case for a correction in Aussie.
Yeah, I mean, the
Aussie Kiwi's off the charts on RSI.
Yeah, it's breaking higher.
It's
so
a monster.
You know.
Look at this.
Oh yeah, yeah. Yeah, it's out. It's out of control. So, yeah. So,
okay. So,
anyway.
how you doing, Blake?
It's Monday. I mean, you know,
God, was hard.
Do you want me to start complaining? Because I can. I mean, it's, you know.
Okay. Well, I'm just asking you how it's going.
You know,
wonderful.
Oh no, I don't want to say that. It's too hot here. I mean, I'm seriously. The heat's getting to me. I was talking with friends. We have some neighbors that we, you know, quarantine COVID with. You know, I mean, we do things, but I mean, we try to lay low, you know, obviously in the current environment. Arizona, you know, COVID cases are leveling off. So we hang out with some friends. When we hang out with them, we'll hang out outside. They have this big swamp cooler that, you know, blows air on you, you know, when you're sitting outside, and they you know, it's great to a certain extent, but when it's hot, you know what I mean?
Yeah.
But we were sitting out there on, I think it was Saturday night, and having a couple of cocktails, and we got like 3 droplets of rain, and we thought, oh my God, this is the greatest thing. So monsoon's going to start. Yeah, it just never did. So it's nasty
Pretty
here.
unusual that they're
Hey, are
not.
you guys dealing with rolling blackouts over there in California? I know that I talked to my mother in Northern California, and she hadn't gotten them yet. So
No, nothing down here in Southern Cal that I'm aware of yet. But this is when they were happening last year, when they had that big fire.
yeah,
That I forgot which utility company got sued. Actually, some guy I think went to jail. PG&E, yeah.
yeah. That's when we were over at we were actually in Napa last year at that
When that
time,
happened?
because we thought we were going to lose power at our hotel when we were in Napa Valley. And it was a big and the funny thing is, I say funny, but the PG&E executives were in Napa the week before.
Wine tasting?
Yeah, they were out there. They were. So for those of you that don't know him, Kevin Ferry, he used to be a very much a back in, I want to say 2000 to 2012 ish, maybe 2014 ish. Kevin Ferry was hold on, let me pull up a picture of him. So some of you guys might know who he is. Kevin Ferry, CNBC. You might remember who he is from CNBC years back. So this would be Kevin Ferry, right?
Oh yeah.
Yeah. So Kevin, you'd always see him on the CME, right? Doing all the live reports. I've known Kevin for years, and so we brought him in as a special guest to come speak to our traders in Dallas. That's not him. This would be him. That'd be him. We had him come speak to us for a bunch of traders, like 20 of us, 25 of us back in Dallas. Like, I want to say it was about 2010, roughly. And I've known him since then, and we've stayed in contact. But whenever I go to Napa now, he actually is semi-retired. He's semi-retired, I call it. He went to Napa, and because his daughter's a chef out there, and she's like a Michelin star chef. Anyway, so when we go out there, he's running a winery now. And so when we go out there, we go to his winery, amongst other wineries, obviously, but he takes care of us up there. And this whole power outage thing was happening last year in California, and he was telling me how the PG&E executives were just there, like just before they shut down all the power, they were out there, or just after they shut down the power, and yeah, they're out there just partying away. Probably on the taxpayers' money. Who knows? Anyway, that's I'm sure you're excited to hear about that, huh, Dale?
Yeah. Well, yeah. Last year it was normal. Everyone is very sentimental about pre-COVID world that we took for granted.
Of course.
Yeah.
Well, speaking of COVID world, we're in August, it's mid-August. The markets are still really quiet, especially FX, and I think a lot of that's due to the lack of volatility, and people are, even though it's COVID and there's a lot of people at home, I think a lot of people are just ejecting themselves from the computer and taking some time off. And so volatility is pretty benign, but that doesn't mean there's not going to be some setups. So there's setups in currencies, and I think there's some good ones. The dollar's been a bit range bound all month. You can really see it in the euro dollar, because well, you know, once this euro rallied past the, you know, the 115 level, 116 level, you know, it's been, you can see how we've been sideways this entire month, just consolidating our gains. And as I said in the week ahead video, you know, the longer we stay up here, the more bullish it becomes. The one thing that I am a little nervous about the euro dollar in particular is that, you know, everybody's long. And so because everybody's long, it doesn't mean that it can't go higher. I think just positioning's a little stretched, and that always makes me nervous about the likelihood of a continuation. You know, if you get any type of blip in risk appetite, then the problem is you're probably going to see a little bit of a pullback in you know, these pairs, and you're going to see a bounce in the dollar. So that's the obvious risk right now. The flip side to that is, I don't know when stocks are going to come down, because here we are, you know, right at all-time highs, and it looks like we want to break higher. So that doesn't seem like it's coming anytime yet, but I think there are some things that are actually flashing some warning signs. So let's talk about, well, let's do our bias chart first and foremost. And I'm going to say that Steve is out of town. Dale had mentioned it. So it'll be myself, Stelios, and Dale here today. Later on this week, we'll probably have, you know, Grega, who does the Elliott wave analysis for ForexAnalytix. He'll be popping in sometime this week. We're going to have Andre, who does the harmonic analysis on ForexAnalytix. He'll be here later this week, I'm sure. Paul Franco, who does the European crossover, he'll be joining us at some point. So we'll bring in some of our own team members, but also Dale will do his normal interviews. So you know, it'll still be a good week. We just won't have Steve here to give you some of his thoughts, since he is taking the week off with his wife and son. So let's talk about, well, let's get the bias chart. What's that?
Nice.
Yeah, I mean, hey, I wish I could vacation. I mean,
yeah, me too.
You know, and the thing is we probably could have, and I can honestly say we just didn't try hard enough to go just get an Airbnb somewhere. You know, we started searching for Airbnbs, and they were like booked out for almost everything that we wanted was booked out for like weeks in advance. We're like, you know, let's, you know, maybe it's just safer to stay home, you know, kind of thing.
I heard they were in trouble after this COVID thing, but I guess it rebounded so that they're all booked up, these Airbnb places.
Yeah, I mean, look, if I'm gonna take a vacation, I just want to get into someplace that's a little different. I just, you know, I'll go run a place and go, you know, bring my own food. It's just good, you know, just get it to change of pace. And I think that's what a lot of people want to do. But anyway, okay, let's talk about, let's get the bias chart ready for today. So here's the euro intraday. It's a 4-hour chart. We are knocking our head up against a 78% retracement. I am going to just mark up 119 because, you know, 119, obviously 119.10 is going to be resistance here. Okay, and I do believe we're still in a very bullish trend. So, you know, I'm more interested in the euro buying dips down at 117. I'd actually be really interested in buying the euro down on a dip to 116, as you all know, if you listen to me every day here. But for now, you know, the range rules. And you can also see right here is probably going to be good intraday support right through here. And that comes in at 117.90. So, you know, you have 117.10, 117.90. Those are your support levels, okay, in a bullish trend. I'd rather be buying dips than selling rallies. So, you know, so we got that. Okay, here's the cable. Also, very similar type of situation. We drew that. I think I drew that on the week ahead video, but I can't remember. Anyway, one of the issues that we have with the cable is, well, there's a few, right? We have horizontal resistance here at 132. We have the trend line from 2018 highs all the way to current prices. They are all, you know, knocking up against the basically 131.85 levels. So, you know, that's obvious resistance. The cable's struggling a little bit where the euro's stronger. So obviously we're going to see some movement in the euro sterling as a result. But right now, I'm thinking the cable's actually developing some sort of a triangle, and you can kind of see it like this, you know. And I think that's probably what we're dealing with right now. Being resistance going to be at, I'll write down 131.40, support being 130.30. I still think it's bullish, because, you know, we're like the euro, we're just consolidating gains. You know, if this is a, you know, bullish, whoops, this is a pennant, you know, here's your flag pole pennant, you know, it's a bullish setup. I mean, any which way you slice it. So just, you know, be mindful of that, you know, because I know that a lot of traders, the problem with a lot of traders, especially when you're trading intraday, is you want to fade some overbought. You know, you see something that's overbought, you see something that's oversold, you want to you know, you want to fade it. That's natural, but be mindful of, you know, these trends that have really started to mature and still show some, you know, dollar weakness overall. Okay, now the Aussie and the Kiwi are a little bit different, and I'm going to talk about those here right now. Here's the Aussie. The Aussie could be setting up, you know, like a double-headed dragon formation. I'm just kidding. It looks like more of like a possible head and shoulder pattern. You know, this being a shoulder, these being like a double head, this being like a shoulder. You know, and we're, you know, you can see how we're rejecting in the 618. We're just kind of holding here. So I'm gonna mark up resistance as being basically 72 cents. I think that's pretty key resistance. I still think we're bullish while we're above 70.75, as you guys know if you listen here every day. But right now, intraday support could be, you know, if we drop all the way back down to this trend line of what might be the, you know, complex head and shoulder pattern. So 71, I guess that's 71.20. So I'm going to write down 70.75. That's obviously critical support. When I put it in an asterisk, that means it's really, really key support here that we got to be mindful of. 71.20 intraday support. Kiwi looks like crap, and you know every day last week, and if you guys recall, instead of putting this as bullish, I've been putting it as range. Why? Because we've been talking about how the Kiwi is really underperformed like the Aussie. Problem with the Kiwi right now is if you've been shorting it, you know, since like last week, first of all, it's a frustrating trade, but B, it's kind of grinded lower, okay? But what we are at is this multi-year trend line that we broke, which is 2014 to present day. We're back testing it. Now that's important because if you're short, you got to be real careful that we're here at this like 65-cent level, which I think is going to be, you know, obviously really key. This is pretty key support. But what's more important is if we break through that support. If we break through that support, we might see 64 cents quickly. All right. Now, resistance on any move higher now, you look at these spike lows over here, and that comes in around 65. Well, I know 66 cents is going to be a big deal, but now any move back up to like 65, 75, I think is going to find sellers if we do see it. Oops, 65, 75. Okay, I'm going to keep it on range. Dollar Canadian. The dollar Canadian, you know, we had a couple of false breakdowns the last week. So, you know, Friday we had another false breakdown. Let me move this over a little bit. So, you know, we tried to break down on Thursday. Friday we had a little false breakdown. The weekly is still, you know, kind of broken here, but we had the false breakdown a couple of weeks back. But any which way you slice it, the dollar Canadian cannot turn really bullish until we get past this channel resistance. But you can see how we're in this downsloping channel. And we hit the 127% extension of this last move here. And so any bounce back towards really, wait, hold on, Trump says China made largest order of corn last week. All right. It's not moving the markets, but I just I see people are some people that we follow are just kind of our bank analysts are noting it. Nothing big though. Dollar Canadian. Okay, so currently you can see this bounce here. We're rejecting the 38% retracement, previous support, current resistance. That comes in at 132.65. So that's intraday resistance. Support, I mean, you know, dips to 132 are probably going to be pretty well supported today if we get down there. So, and as you guys know, I've even though we're in a, I've kept it neutral just because we are at really, you know, big supports here. And really, if you look at like what the Aussie's done over the last month or two and the Kiwi's done over the last month or two, how they've rallied substantially, you know, you see the, you know, here's the Kiwi ripping, here's the Aussie ripping, here's the Canadian. It's just, I mean, it's fallen, but hasn't fallen too far. So, you know, it's definitely divergent from a commodity currency standpoint against other commodity currencies. So I've kept it range, but, you know, really, you know, you go from bearish to range quite frequently here. I'm just going to leave it on range. Just be careful with the Canadian. Swissy. Let's go over to the Swissy. Hey, Stelios, do we have any data coming out today? And good morning, by the way, if you're here.
Good morning. We have Empire State Manufacturing.
Is that coming out in 4 minutes?
In 3 minutes, yeah.
Okay, yeah, okay, thanks. I'll stop analysis for that. So here's the dollar Swiss. As you guys know, 90.50, 92, 92.40, and while we're below 92.40, we can't turn bullish because that is a multi-year trend line break. So I'll write down those numbers because they haven't changed, and I can't remember when's the last time we've changed those. 92. 92.40 and in a bearish trend. But let's also pay attention with the Swissy. We're near some support here, and you can see it, you know, finding buyers down here. So just be a little careful with that. You're near the range bottom. I mean, if you really wanted to get long the dollar Swiss, you go, okay, well, I'm getting long here at 90.80, putting my stop below 90.40, and I'm risking 40 pips to make, you know, 60 or 80 pips. I mean, you know, the risk rewards gets, you know, more favorable down at these levels. I'll do the Norwegian krona really quick because there's really no change. 881 and resistance is 9 because that's the multi-year, or not multi-year, big trend line. Okay, we're still bearish while we're below it, so I'll just do that really quick since I saw it. 881, it's 161% extension. And then, so Empire State Manufacturing, Stelios, what do we got here?
Well, I mean, it's not going to move the markets either way, but we're expecting a small drop from last month to 15, and you know, this is all in line with a recovery from the last 2 or 3 months of disaster. So that's what we're expecting. But really, as I said, I don't think it's going to move the needle much unless it's a huge beat or a huge miss.
Yeah.
And, yeah, I hope you fix your aircon, man. Is it
what?
Your aircon, is it?
Oh, yeah, it's the air conditioning. So you guys might have, I don't know if I mentioned it here. We had one of our AC units went down on Thursday. And Thursday last week, or is it Friday or Wednesday? I can't remember. But we had one of our AC units went down. I mean, it's 100 and it was like 115 degrees. It ended up being an electrical issue. So it was great.
That's good.
Yeah, I mean, you know, because whenever you have your air conditioning go out here, your problems could range from you know, a couple $100 problem to a $8,000 problem. I mean, because if I have to replace the whole unit and the air handler, because you got to replace them both at the same time. I mean, you're talking $8,000-9,000, you know, so you
Sounds like
don't
you
know.
have experience with it.
Yeah, I mean, when you live in Arizona,
Number is quite weak actually.
it just came out, and dang, I forgot to show if we saw it on Bloomberg quicker. So a little bit weaker here, huh? It's not moving the dollar.
No, data
At
is
all.
no longer that big a deal, is it?
No. Well, you know, at some point, data is going to start to matter again. So.
Oh, absolutely.
All right.
But,
So, hey,
go
ahead. Go ahead. Say what you're going to say.
I was just going to say, with the wide range of numbers that we're getting now, you know, if this was last year and we had such a big miss, it would have moved a lot. But now, who cares?
Yeah.
The next reading could be a lot better.
And by the way, I was just showing you the data via Data Flash. That's this. If you are a ForexAnalytix subscriber, you get this. This is great for news releases. It populates sometimes faster than Bloomberg. We were watching retail sales last Friday, and it came in faster than my Bloomberg system, which is, you know, $2,800 a month. So you know what I mean? You know, it's a nice little add-on for, you know, if you're a subscriber with ForexAnalytix. Anyway, hey, so give me a second. I'm going to finish up my bias chart here, Stelios. I should be done with it in give me about 5 minutes, and then let's chat with Dale. Chatting fireside chat with Dale.
I'm here.
Stelios and Blake as special guests. Okay, I'm going to just wrap this up really quick. Where were we at? Dollar yen. So let's go to the dollar yen really quick. Okay, so the dollar yen. The thing that worries me about the dollar yen is that you'll notice we had this channel, and one of the things that's made me really nervous about shorting the dollar yen is anytime we would drop below 104.50 over the course of the last several years, buyers would swoop in, and that was the same thing that happened a couple of weeks ago. We started to break down. We broke down below 105, and then, you know, selling accelerated, and then boom, you know, just ripped, right? And so it made me a little nervous being on the short side of the dollar yen, knowing that we, you know, anytime we got below 105, it was just like, you know, we rally back. Here we are, stalled at the 50% retracement, which is 107, and now we're back below the 106.50 breakout point, which should lead us to a move back to 106. So just keep that in mind. You know, dollar yen looks like we're heading back to 106. So 106, and it is range bound, and frankly, I don't know how to trade the yen. Meaning, I don't have a macro view on the dollar yen. As a matter of fact, I'm going to write down 106.60. But that doesn't mean that other yen pairs don't look like they're, you know, setting up well. I just, you know, the dollar yen's, it's hard to tell if it's being really affected by yields.
That's what I think.
I think yields are starting to weigh on the dollar yen again, at least the last couple of sessions. But, you know, just when you start to think that, it'll break that correlation. You know what I mean? So I'm not, put it this way, Dale, I'm just not 100% sure. You know,
I never am.
Well, I'm never. You know what I mean. I'm just not like super confident about it.
Yeah.
All right. So
correlations are, you know,
correlations have been really tough in FX because when, you know, currencies are when central banks are all going to ZERP, which you remember my argument from, well, how many years ago was that, Dale, with you and I? Like every central bank's going to ZERP, and we're like, yeah, here we are.
Yeah.
We're almost there. You know, all the G10. You know, let's get them all to ZERP. Getting close.
We're the last pony.
But you know, when there's no moves in rates and because of COVID, you're like, well, when are rates going to move up again? 2-5 years from now? Who knows? You know, and now currencies don't correlate all that well because when all rates are, you know, the same place,
they're always changing the game.
Always, Dale. When have they kept the game the same in your experience over the years?
Right. You know, as soon as you think you have it.
That's right. Okay. Sorry, I didn't mean to yawn on you guys. 92.50 is going to be support. 94. You guys know this is the same numbers we've been writing down forever. But intraday, we might have some support here in 92.78, which is 78% retracement. So I'll write that down. 92.50, 92.78 intraday, and then 94. And we are in a bearish. Whoops. We are in a bearish trend. With the dollar index still. Okay, dollar Mexican peso. So if you guys didn't see the dollar Mexican peso found support today, where it found support, a couple things that are really important. Here's your daily chart. So as I explained on the week ahead video, I actually lost some pretty good money last week trying to play the dollar Mex. I was playing it on the long side. I went long here, made money here, sold some of it, wish I would have sold everything, but sold some of it up here. When it dropped back down to here, I got long, I added, and then when it broke through the 618 ahead of Banxico, I got out of it and took a loss on the remainder of it, and I was so irritated at that. But what we've done is we've actually found support on the back at the channel, or excuse me, at the broken trend line, but also near this horizontal support too. And if we can hold these lows, then we're making higher lows, and that's important. You know, this is a lot of key support down here. Okay, a lot of key support at the 2190 level. So I'm going to write that down as support. I think the dollar Mex is range bound. Okay. It is range bound right now. I think resistance is going to be pretty strong on any move back up towards 2220. And then let me just get gold and S&P really quick. So S&P is pretty easy, right? All-time highs at 3,400, support at 3,355, and then 3,300. It's easy. So, I mean, there's nothing really to write here other than it's going higher, and as long as we stay above those support levels, there's no reason for us not to believe that we're not going to hit, you know, highs. So the all-time highs here, Dale, is, oops, I'm on the wrong chart. 3398. I mean, 4,000. Okay. Gold. Look at us hitting highs again. I mean, Dale, how do you feel about gold here other than it's going up? I mean, how many people right now are trying to short gold? I mean,
A lot of people.
everybody,
Probably.
right?
Yeah.
Everybody. Yeah. You know, false breakout, blah, blah, blah. They can't go any higher. It's a piece of doggy do, whatever. You know, obviously,
you saw Warren Buffett went long, right?
Yeah.
Went long. Was it
Did he?
GLD or the GLD or
When?
the miners? I can't remember, but yeah,
When?
He went long Barrick.
there you
Really?
go. Very cold, yeah.
Yeah.
And remember,
Really?
he's been saying all the stuff about gold being a pet rock, and really, that says a lot, I think.
It's unusual for him. He used to, you know, be a detractor of gold. So that's a big switch for him.
That is big. Okay. You guys might remember from last week, I was saying 1900 is going to be support, 2000 is going to be resistance. I still think that we are going to find resistance up here. I believe that gold is actually consolidating these gains. So the gains that you see here, we're going to eventually break higher, but we're going to end up probably in a couple week consolidation, I would assume. If I had to guess, gold's going to be doing this, something like this, right?
Joe is saying the gold's 0.5% of his portfolio. Apple is 44% of his portfolio.
Wow.
One stock, almost half.
That's nuts. Okay.
So him and the S&B and him probably own like half of Apple. Anyway,
that's crazy, huh? So there's your bias chart. I'm going to leave it up there for a second for those of you guys that want to take a screenshot. So Stelios, how you doing? How's your weekend? I heard you dropped your phone in the water.
Yeah, it's waterproof, supposed to work, and then it went dead on me like 3 hours
So
later.
just because they say it's waterproof doesn't mean you have to
Uh,
test the boundaries of it.
to give them some credit, I've had it for 3 years. I've tested it many times with water and the sea and everything, and it always worked. And today it decided to leave me. Anyway, it's okay. It's
Mm,
okay.
okay. That's like,
Yeah.
I got an Apple Watch for Christmas, like the third series. Not the newest series. I had the third series. My wife bought it for me for Christmas a couple of years ago.
Yeah.
And they say you can swim with it. And I'm like, why? Why would I take an electronic device in the water and swim with it? I just
Yeah.
don't like that. I mean, yeah, great that you can do it, but it's like, why even risk it? That's silly. But I mean,
There's
I'm
how it
sure
sounds, Blake.
people do it.
How are you
Yeah,
doing?
right.
By the way, I
Yeah.
did put it in rice, like our friends are saying. It's been there for over 24 hours. It's still not working. I'll give it another 24 hours to see what happens. But anyway.
Yeah,
Yeah. Put the
right.
blow dryer on it still.
Being half Asian, rice. I know that rice cures everything. No, I have actually put I've had a watch. I remember I got thrown in the pool, and one of my watches, the crown was undone, and it got wet, and I threw it in with some rice, and it kept it from rusting. So it's not good stuff. So, so Stelios, other than your phone faux pas, what else is going on? What are you seeing that's moving right now? I mean, precious metals continue to rally, stocks continue their relentless grind higher. It seems like currencies are going sideways.
Yeah.
What are you seeing here?
Well, at the moment, it's only precious metals, and our friend here, DJ, is saying I've taped over the sell button in gold. I only go long. I agree with that, and I'm still long some silver, but it's only a quarter of my position, and I'm actually hoping for a dip to get longer again. But yeah, I mean, like you said, everybody wants to short gold and silver, and I read it on Twitter and everywhere.
But
Um,
I don't understand why. Now here, let me tell you this. And for if you guys have been here listening on the ForexAnalytix, how long have we been doing these broadcasts now as ForexAnalytix? I mean, some of you guys have listened to my Morning Edge show from I mean,
About 3.5 years, Blake.
3 years,
so
we've been 4
yeah.
months and 16 days.
And by the way, anybody listening in that used to listen to the Morning Edge with me before we were ForexAnalytix, how many of you guys listen to the Morning Edge? And because I used to broadcast that for years and years and years.
Oh, I thought that was a shaving show.
Mark, remember Mark, Ziggy, Gary, yeah, Alex, no, not Alex, Sanse, Forex Gal remembers the Morning Edge. Yeah, I mean, the Morning Edge, I did that for so many years, but I couldn't remember, but I guess it was about 2 years ago. It was about 2.5 years ago. I went long, or I went and bought physical silver and gold, right? Is it like
Smart.
yeah, because I sold all of my physical gold here, right here at 1530. And some of you that are listening in, the reason why I said Charles remembers, Sanse said, I remember when you sold it. And Chad says, I remember when you used to get upset of the color of my underwear a lot. That's funny, Chad. Anyway, but Sanse remembers when I sold it right here. And I made an appointment for my broker that day that it broke down. I'm like, I'm selling all the physical. So then I went back and I bought all of the physical gold back right here.
Nice.
I want to say it was right here around, I was 1290 or something. So we were in this bull flag down here. And some of you that are listening into to this webinar probably remember when I did that. And I bought silver at the same time. I went and bought physical silver, and the physical silver was closer to like right here. So, it was like $17 or something like that. Right. So I was really close, Stelios, Dale, to pulling the plug. I was actually about ready to call my broker last week and make an appointment to come in and and sell it all, because I was a little scared that we were going to break back below the all-time highs here in gold. But frankly, I still believe in gold and silver, and again, this is a same situation. Well, I don't want to say same situation, but similar situation to the 2010 2010 era, when banks were providing massive liquidity, and you can see what happened with silver and gold. We were just starting at a higher price. So, this move here, this move here, right? Roughly, something like, actually it's more like this move here happened because of all the central bank activity. So that you could say that equates to about something like this. So I believe that gold's eventually going to like 2,500. Silver is going to go back to 40 or 50, somewhere up here. But I was a little worried with the price action last week when we were dipping. But now that we're just kind of maintaining above 1,900, I still feel that gold is eventually going higher. What do you guys think?
I agree. We have to remember, it's good to compare the 2008 stimulus with today, but the amounts today are completely on a different scale. So I think for that reason, the dips in gold and silver, which will come, are going to be smaller than they were before, especially silver, went from 50 down to, what was it, 13 at the lows.
I remember when you were loading the boat down there in the teens. I mean,
I was trying. Personally, I only trade long. I accumulate some a particular type of gold coins over years and years and years. I never sell them. But silver, I only trade via ETFs because I want to be able to get in and out quickly. And it's purely for I don't intend to buy physical silver and hold it forever. I've done it a couple of times, but really it's ETFs I'm using. But I agree with you. I think that the price action was a little bit dangerous, let's say, the way they pulled back quite violently after the big spike. But now they're consolidating. Silver in particular is consolidating above the 26, 27. It's a big zone there. And as long as it's above there, I think it's still quite bullish. As I said before, I still have a little bit of a position on long, but I'm hoping for a big push towards like 21. There I'm going to get a lot longer. If I miss it, I missed it. So
and DJ said it correctly, and this has been my argument for a long time. That's why I bought it a couple of years ago. It says people are looking for alternatives to store value in a world where fiat is becoming worthless. Yes, and where inflation could at some point become an issue, and because that means real assets are going to go higher. Whether and you're seeing it in I don't know where you guys live, but our real estate is off the charts here, and we have some really high unemployment where I live. I mean, it's crazy, and we've got this record heat. I don't understand why people are even buying stuff here, but between cars and gold and assets like properties and that's, in my opinion, showing a little bit inflationary. So yeah, people are looking for places to store value other than in currencies. I agree with that. But the reason why I originally bought gold and silver is because I thought we were walking head first into an eventual fiscal and macro downturn in the economy. And I didn't, obviously no one saw COVID coming, a pandemic coming, maybe,
Really, I think half of Twitter was waiting for it.
Yeah, right. But I mean, that just kind of accelerated everything. But Sanse asked if I'm still going to sell half of my silver once it gets above 30. I actually, it depends on price action. I mean, I think we could probably, looking at it now and how we're just holding on to gains, I think we could probably trade back towards 40s or 50s, and I am going to start selling some of it because when you got physical, it's like, okay, I don't mind dishing out a little bit of that anyway. But it's not as easy as it's not like electronically traded where you hit the bid. I actually have to go make an appointment, and
plus you give up a lot on the spread.
It's a huge spread because exactly, that's a good point. So if gold, like let's say spot is trading at 27.25, I might only get 26.80 on it, you know, maybe 26.50. You know what I mean? So I give up almost $1 on
At the lows on that COVID crash, when they were trading a little under 12, you had to pay $4 premium over spot to get it.
My God.
$4.
Well, I know the spreads for silver are somewhere close. For my broker, it's about 80 cents to $1. At last I recall. But that's when it wasn't moving anywhere either. You know, and that's when we were at 13. So, you know, or you know, 16. So now that you're in, you know, you're in the mid 20s, I mean, maybe the spread's $2 now, you know. And like I said, I haven't checked. It's, you know.
Well, they were claiming inventories were low.
Yeah.
Physical.
Yeah.
Yeah.
I agree, Blake. I agree with you regarding real assets. I think you know people are writing here comments about UK properties. I used to live in the UK for many years. I think property levels are ridiculous there. My brother still lives there, and lots of friends I have there. But you know, in other parts of the world, you know, I think land is a good investment. You know, there's no maintenance costs or very little. I have a friend who's a ship owner, and he's into cars, you know, rare cars, and he told me that even in 2008, the dip in the market was practically none in the you know special, you know, fine and rare cars. And now in COVID, actually, there was more demand than before. So because people just want to get something which is real, which is rare, and that can actually be sold afterwards. You know, because for certain cars specifically, there's a quite liquid market. But anyway, you know,
it's nuts.
It is what it is. Yeah.
Okay, so as far as currencies go, I mean, you know, we have, you know, I'm trying to figure out first of all, and I mentioned this during the week ahead video for those of you that were listening to the week ahead. We do have at the end of the month we have damn it. Jackson Hole. Jeez. that's what happens when you get up at 3 o'clock in the morning. Jackson Hole Symposium. Do you know if it's gonna be a thing, or is it virtual? I just know it's happening. I haven't done the research enough to see if people are actually flying into Wyoming or if they're
virtual.
just doing.
Nikita just wrote it's virtual. I didn't know.
Is it virtual?
Apparently it is. Yeah.
Yeah. So that's. It's virtual. Yeah, I figured it probably would be. I mean, dude, if you're one of the wealthiest people in the world, and you're like, look, I'm not going to get COVID. I'll do it virtually. But anyway, the reason why I mentioned that, because, you know, when we have Jay Powell talk, one of the things that, you know, these Jackson Hole Symposium has done for the Fed is allowed the Fed to rewrite its playbook, if you will. And, you know, there's been a lot of talk of the yield curve control. And I think that is I think there's a risk for a policy shift. Now, remember, it's the end of the month, so it's not something that's going to happen here within the next week, but it's something that I think we should be, you know, kind of keeping on the radar as we get closer to it. What are your thoughts there, Stelios?
Yield curve control, you mean?
Or, you know, is that something we should even be paying attention to?
Well, it's been done elsewhere, so why not? Now, central banks, you know, can see the effects of policy tools on other countries. You know, Japan is doing yield curve control for a while. If they do that and they try to anchor long-term rates, then effectively they're just dictating every market,
right?
Which is not what you want, really not what you want, because at some point the whole thing is going to blow up in their face, and when it does, it's going to be 100 times worse than it would have been before. But I don't know. I don't know if we can expect something big announced. I doubt it, but you know, you never know. I don't know.
Well,
a couple of other things actually. Go on. No, you're going to say something.
No, I was going to say, did you see the AMLO, the Mexican president? He just Labrador. You know, I don't want to go his whole name because I'll mutilate it. I would be the first to take the Russian vaccine we'll talk to Russia if their vaccine proves successful.
Did he really say that? Good. Okay.
You first. You go ahead. Okay.
Yeah.
All right. Go ahead.
Just a couple of things I wanted to mention.
Yep.
First of all, we were talking about the Kiwi before, and for people who weren't aware, they are delaying elections by 4 weeks because of this new outbreak, if you want to call it an outbreak, the
Do they have 4
reemergence of
people?
COVID. Yeah, they have a few, but it's re-emerging. So Ardern is postponing it, even though, I don't think it's going to make any difference because apparently last poll she was well above 50%, really, really in the lead. So I don't think she's in any danger of losing. Famous last words, I know. But that was on the New Zealand side. Then we had in the US, there's this whole talk about the Postal Service and how votes sent in by post can be manipulated. Well, that's what Trump has been saying. And there's this whole issue about the some House members are trying to draft legislation, urgent legislation to help basically the Postal Service. And so that's one thing. And, if done properly, I don't see why voting by post should not happen. It's been done before.
They took all the sorter machines out.
The what machines?
The mail sorters.
Oh, really?
They say that it's possible 90% of them are gone. And I don't know, they sort mail at like 30,000 pieces a minute. And that, they finally stopped them after they were taking mailboxes and off the streets. Okay. So, yeah, I mean, it's sabotage, don't you think? I mean, why get rid of something that made the mail, which, everyone loves the mail. I don't care if you're a Democrat or Republican or independent. It's a pretty good value.
It's the taxpayers pay for it. I mean, this is our service that we pay for. So
they tried to streamline it by making it dysfunctional.
But I'll tell you a story. I've been a Netflix subscriber since I always pride
when they
myself
used to
on,
mail them to you.
Yeah, but even before that, I mean, seriously, I still get them mailed. No, so let me explain. I've been a Netflix subscriber probably since 98, 99, like probably one of the first 10, 15,000 people, right? When it first came out. And, back when they used to send us DVDs. I still have the DVD subscription. The reason why I keep a DVD subscription along with my streaming is because I get like new releases. So when like a new movie comes out, they'll send that to me and I can keep it as long as I want, and then I can just return it, throw it back in the mail. The thing is the way I used to gauge the way I can gauge the health of the postal service is I could literally drop a CD or a DVD or whatever they are. I drop a DVD on Saturday and they'll receive it within 1 day, send me a new DVD, and I'll have it like 2 days later. So I could drop it on Monday, and by Thursday or the weekend, I would have a new movie, right? That now it's like it's probably like an 8 to 10 day turnaround time. It's almost doubled the time.
Oh, wow.
Yeah, which is crazy. So I just started recognizing that actually about 2 weeks before the post office news, all the news started. The media is all over it now. So about 2 weeks before, I'm like, what is going on with the postal service? Like, because being in COVID lockdown, my family and I have done a lot of, we've done a lot of movie nights, because what else do you do, right? So, especially with my kids, I'm introducing my kids to a lot of these old movies that I used to love back in the, 90s and 2000s, and but I noticed the very, very big slowdown in the postal service a couple weeks before it all started, getting out there. But anyway, hey, we only have about a minute before Dale starts his interview. So I want to say, if you are not a ForexAnalytix subscriber, where we have a tab that says ForexAnalytix sponsored. There are a couple ways to be able to get ForexAnalytix first of all, you can test it out. It's $1 for 10 days. But if you open an account with Pepperstone, a live trading account, and you trade with them, you can get ForexAnalytix for free for a certain period of time. Read through here for the details. Pepperstone Securities is one of the biggest FX brokers in the world, so check them out. Forest Park FX, if you are in the US or Canada and you want to get cashback rebates, make sure you talk to them because they are our webinar sponsors and they help us make sure that this face webinar comes to you each and every trading day. So Dale Stelios, thanks for your chit-chatting today. I know we didn't cover a lot, but I have to admit currencies aren't really moving right now, so it's kind of slow. But it's not going to be every day.
We gave some good guidelines, Blake, and your bias chart always gives people numbers.
Yeah,
and people need to subscribe so they could get Paulie's numbers for scalping in the morning.
Oh, they can get Paulie's numbers. They can get all the analysis on all the cross rates that we do and all the indices that we do. Because I just don't have time to do all the analysis right here. But I do it. I do the basic technical analysis throughout the course of the week, myself and the rest of the team. But if you want to see my analysis, this is where it's at. It's all on, and it's on your mobile device too, because that's how it gets to you. So. Dale, Stelios,
okay, buddy.
You guys have a great day, and good luck, everybody. And by the way, ForexAnalytix subscribers and clients, you have the daily roundup in 4 hours. I host that webinar. It's for you guys only. So I'll see you guys in 4 hours, those of you that are part of it.
Good luck today, Blake.
All right, thanks, guys.
Stel, good luck today. Okay, Christopher, you guys should stick around for this guy. He's an excellent technician. Welcome back, Christopher. I'm just going to get you set up. There you are.
Hey,
hi,
sorry
Chris.
about that.
That's okay, buddy. How have you been?
Oh man, doing good. Man, I tell you what, just watching all these markets just kind of go crazy here.
Yeah, I mean, a lot has happened since we last talked. Do you remember the share screen to show your setup here?
Yeah. Let me get over here where we at. Sorry about that. Let me see.
That's okay.
Got to figure out the right one here. Let's go. She's still the only place I use this Zoom with.
Okay. Well, for people that aren't familiar with you, they could find you, Chris, on Twitter at TX West Capital, Texas West Capital, and you're a Wyckoff guy. And I'm, since you and I talked, we had that, it hasn't been a great period for people bearish anything. We had the huge run in silver and gold, but sure, let's start off with VIX and what you're seeing here. I know that despite the market going to new all-time highs, we still haven't filled that gap at 18. So take it away and tell us what you're seeing here.
Yeah, so it really, it's gone up a bit higher than I would have liked to have seen it go. But at the end of the day, I mean, if we look at this as where we potentially are in terms of the larger Elliott wave, it makes a lot of sense. Now, at this point now, we'll look at a closer S&P E-minis chart here in a minute, but we're pretty close to the all-time high.
Yeah.
And so, it's kind of hard to believe that it won't go up over it, but, crazier things have happened. Even if it is, I mean, basically all that does with the count here is make this expanded flat here as a 4. So you've got an A and a B and a C. That gives you a 5 right here, which shouldn't go a whole lot higher than the all-time high. Maybe that works as a, so something everybody's like, oh yeah, look, it's definitely bullish, and then we're going to new. Everybody thinks that all the markets right now are going up. Everybody thinks gold's going to continue up. Everybody thinks silver, stock market. The big thing behind that is that the Fed, they said, oh, the Fed's
right.
not going to let it go any higher, go any lower. But at the end of the day, the Fed really doesn't do anything other than try to get the market to believe what it says so that the market does what it needs it to do. So
yeah, and they were pretty effective. They were pretty effective during COVID, especially when they said they were going to come in and buy corporate bonds. I think at the beginning they didn't even spend $1 and took LQD back to the highs. So
Right, right.
yeah, so are they doing more than jawboning now? I think they bought ETFs.
Oh yeah, no, no. Yeah, but they haven't bought anything in quite a while. As a matter of fact, their balance sheet has been dropping over the last month, 2 months now.
Okay.
So yeah, so I mean, I think, you know, if we look at the S&P here, you know, we can look at the volatility index here, the VIX, and you know, it's making this descending wedge here, and so, you know, we get a pop out of that wedge, and that could be what really just kind of freaks everybody out, because I mean, even though people are thinking, oh yeah, it's going to go up, any kind of weakness that shows up there, and you know, people will attribute it to whatever's going on in the news. We have a habit as human, you know, as being human beings, that we tend to, when something happens, we try to find a reason in hindsight why it happens, and then we go, oh, okay, that's why. You know, we attribute news to it afterward.
That's what reporters do, not traders.
Do what?
That's what reporters do, not traders. Reporters tell us what happened after the fact.
Yeah, exactly.
Right.
No, but you know, just as human beings, you know, and it's kind of funny because you know, news and market action happen all the time. It's only at these specific times do we actually go, oh, well, it's because of the news event. But you know, if you were to go back historically and look at all these real large news events, you would notice that they really don't do anything to change trends and whatnot. These things are already, you know, if you're using Elliott wave, many times are already there in the charts. You know, it's just like, oh, well, that's the reason they use for it going down this time. But if we look at what we've got here, you know, again, we've got this VIX here getting ready to pop, which should send this down. That gives us a double top, you know, and that ends up giving quite a low move on there. I think everybody, I think at the end of the day, everybody's just they believe that, you know, I don't even get it, you know, from a rational standpoint, why they would believe that this is all that it takes and heads up there. To me, it really doesn't make a lot of sense. You know, with the fact that if you go back, you know, we've got a 10-year bull market here, and nothing really happened since then. But
Yeah.
so for right now, let me zoom in here real quick. Where's that other chart?
Okay, well, a lot of people are attributing a lot of this to dollar weakness, but okay, now we're looking at S&P's daily. Yeah.
Yeah. This is the E-minis here. And yeah, we're going to take a look at the DXY here in a minute, because I believe at the end of the day, I think the DXY is basically just telling everything else what it's going to do.
I agree. It's the fulcrum on the wheel, don't you think?
Yes, exactly.
Okay.
So, you know, everybody's, I believe I was looking at it just the last few weeks here, and I believe the DXY bears are like either at or pretty close to the bearish they've ever been. And anytime historically this has happened where the bears have been that far off sides for the dollar, it's always reversed up. And so here we are again, and you know, everybody thinks that the dollar is going to, you know, to nothing, basically. Well, maybe not to nothing. You know, and they blame it on, right now, they say, oh, the Fed's printing all this money, which, you know, it's not. It's QE, which is, it's not that they're printing money and throwing it out there, and, you know, in the out there in the sphere for all of us to use. You know, QE end up just being really a bank thing. You know, it kind of gives banks liquidity, a cushion, so that they'll be convinced, encouraged to put out loans to people that they normally wouldn't give out loans to.
How about the relief money fiscally coming from the U.S. government that may have stalled here?
That $1,200 that then in the
unemployment supplement. Yeah, people got an extra $2,400 a month.
Yeah. I mean, you know, there's these big numbers being floated around by Democrats right now, and I'm pretty much apolitical. I think all politics is just a bunch of, anyway.
I hear you. It's all the same as it ever was.
Yeah, exactly.
Right,
And so I'm not, you know, I don't want people to think I'm, you know, anti-Republican, anti-Democrat. I'm both. But at the end of the day, you know,
But did this recovery to new highs surprise you?
I can't say that it's surprised. I'm rarely ever surprised. It's gone up higher than I thought it would, but never
Okay.
higher than I thought was possible. Even when we were down
Okay.
here at the bottom, you know, I had suggested that, you know, we had our levels we were watching. I said, but, you know, realistically, it could likely go way up here. I wouldn't be surprised, you know, and fill in this gap up here.
Yeah. Okay.
So I don't think it surprised us and wow, I couldn't see that coming. It's more of a, well, you know, it's kind of like it let me down.
Yeah, I kind of
You
thought
know.
we'd have that you could sell a fib retracement of the crash and make money. Which, if you
Yeah.
did that, you lost money at every fib level.
Yeah, and I think one of the big problems, unfortunately, for most people that are in the markets, they look at these bigger pictures and they think that if you've got a particular view, you know, a longer term view, or if they happen to have one, then they think, well, you know what, I can't make money any other time. So if I'm talking about, for instance, the idea that you know, that we're going to roll over here and head on down to lower lows. A lot of times newer traders happen to think, well, you know, they can't go long in here. And that's, and unfortunately that's the wrong way to look at it. There's always opportunity, you know, whether the market's going up or down. Just having a larger outlook, just, you know, it just gives you somewhere to look for, you know, to be careful in certain areas.
Okay. All right. So you think we're, what do we need? One more print high to complete up here? Because I was kind of thinking that we would take the double top out in NASDAQ 100 and that would be it. And that it would probably happen this week. So S&Ps, do you think 5 is in and 2 is complete?
Well, I'm with you on this week. I believe it is this week. You know, again, if we look at the VIX there, it looks like it's ready to go.
You follow Bradley models?
I'm sorry, say that again?
The Bradley models, cytographs and stuff. Anyway, there's a turning point date, the 19th. A friend of mine told me I don't follow. That's Wednesday. So,
No,
and then I had astrological guys talk about what happened on Friday, and I think we have a new moon coming up. So there's astro guys, and then I have a cycle guy who's very good that I interviewed a month or so ago, and he was pointing towards mid-August as when the cycles would start to turn negative again. So I have a lot of things lining up. You have a lot of non-confirmations. I see it on your RSI chart too. So are you in the camp that we're going to take out the crash low? Or because right now I'd be happy with a correction back down towards a one-year level, say the 2760 level. I think you have it as S4.
Oh yeah, right here. Yeah.
Yeah.
Or a little bit, almost S5 here.
But
Yeah.
you're looking for a 4 all the way down there. You have
No. Yeah, I mean, if it's doing what I think it's doing, I mean, whether
3,
this is,
I see, all the way down there.
oh yeah, we got
wow.
5 way down here. Yeah.
Okay. Good.
Yeah, and my thought here again is that it's this idea that you know, this
You're one of the most bearish guys I know, Chris. There are other guys I know, but you're one of the bearish guys. And
Well,
you think? Go ahead.
I was just going to say, you know, somebody's got to be, right?
Yeah, you know, okay, you're the most of something. So, time-wise, you really think we could have 3 fulfill before the end of the year?
Oh, no. This isn't time-wise here. No.
All
I
right,
just
yeah,
it's drawn
okay.
out. Yeah.
All right, okay, all right.
No. But you know, the way I'm looking at it again, whether this is, you know, the top here, up here, and we are just, you know, barely going to nick it, and you know, this is a 2 and we're coming off, or if this is, as I was talking there, you know, an expanded flat here for 4. So you have an A and a B and a C, and then this is 5. It goes up just a new all-time high, just higher there.
Yeah.
In either way, it should be, well, the way I'm looking at this grand super cycle top. And if that's correct, I mean, it's going to be something that none of us have ever really seen. I mean, it's going to be comparable to what we saw with the Great Depression as far as how much depth and breadth of movement down it is. I mean, you know, we need credit expansion. We need people to spend money. You know, as of May, it was like 33% savings, personal savings. There was the highest it's ever been in history. You know, people are paying off loans, not taking them out right now. all this, is contracting the money, contracting the velocity. Nobody's taking out all this extra credit, which is what the Fed needs in order for them to, to inflate, to have prices rise.
Yeah, and don't you think people are going to just have post-traumatic stress from what they've gone through and the fears they're living with every day? I know a lot of people don't worry about COVID and they just go about their business, but with it being pounded into their head, older people being at risk, and they're the ones with the money.
Yes,
right?
Exactly.
Okay, the older generation, the baby boomers like me, they're the spenders, and I don't see many of them going to restaurants and going out right now.
Yeah,
I'm not.
exactly. And here's the thing, people, they tend to look at COVID however they want to believe it is. I'm not a pathologist or anything. I don't know about all the, what's going on for sure, but I do know this. I know that if the government believes that COVID's doing, or at least if they want to act like they believe that COVID's doing, all these dangerous things, then they're going to, react accordingly. But I think too many times people, they go, oh, well, this is what I think, and so this is what's going to happen. But the government's going to do what it does, and
isn't this just like, Chris, I wanted to ask you, everyone's saying, I wrote that poem about COVID that, Corona, fear that I'll own you. Born in a lab in China, spreading so I'll find you. No one is safe, not even a king, and it will be the excuse for everything. And weren't we really having problems, economic problems, pre-COVID? We were already in a manufacturing recession before pre-COVID. We were already having trouble, structural issues with the Fed funds market, where the Fed was already coming in September. And I think a lot of people forget that there were negatives prior to COVID that COVID only exacerbated.
Yeah, exactly. And, this is what I said, earlier when I was talking about, as human beings, news and market happen, and market action happen all the time, but it's only in specific times do we actually say, oh, let's find a reason for it. And so, I mean, you said it perfectly there. We already had all these issues. It's just that COVID was the reason that they're giving for this, for this fall right here. Coming down there. But, again, this is, I sit here and I go, okay, well, if that's the case, if it really is news, and these things, these unforeseen things, then how, back in May of 2018, how did I draw out, what the Dow Jones went through all the way up until, $500 off on the top there? I had like a $30,000 target, and then it dropped down to 18,000. It was pretty close. I mean, the markets themselves, because they're nothing more than human emotion going on there, which is, you've got this, what we refer to as the social mood. Yeah. You can kind of figure out where the market's headed, and you can look at what's going on and go, okay, well, here's going to be the reason. And so you get it there. But, a lot of people don't want to agree with that, and that's fine. They're going to do what they're going to do. But I mean, how else do you explain, that then?
I was, let me pose this to you. When we had this big rally that you're showing right here in the S&Ps, normally I would have expected yields to rise on a recovery, and they didn't. They just went sideways. The 10-year yield looked like an EKG of a guy in a coma. But they've come out of the hole. Yields increased pretty good last week. Could it be maybe the 10-year getting back up to 120 or so? And we're also seeing a steepening while this is happening. Maybe that's a catalyst. It wasn't low rates that could be the catalyst, but even say the 10-year going from 50 to 120 is more than a doubling of rates. Could that be a catalyst for this decline, since rates held steady to lower during this advance?
Yeah, for sure, exactly. And I think that's one of the things that's kind of throwing some people off who try to look at more fundamental stuff with the market, like, treasuries and stuff like that. It's this idea that, man, as you said, everybody kind of expected, what didn't happen. And,
right.
and I think when you look at that, I think that's where you step back and you go, okay, it's weird. You know, I have everybody saying, even those who will ride this up excitedly going, yeah, but this is kind of odd. This is weird, you know, but yet they don't stop and say, well, if it's weird, then, you know, let's, you know, why do we think it's going to continue on? It's this, you know, everybody gets into this euphoric mood and they buy, and, you know, you've got Davey Day Trader over there saying that stocks only go up, you know, and now I guess he's into.
You don't know, you know, let me pose this to you too. I mean, during this rally, people that aren't professionals, that are friends of mine, would see what was happening with, you know, businesses being shuttered and everything else. And they'd say, Dale, with what's happening in the economy, why is the market doing what it's doing? What did you tell people that, I'm sure you were asked the same question, how could the market be back at new highs when we still have everything to contend with the hit? And, you know, part of the hit that people don't think about, Chris, is even if things went back to normal today, right now, that in the last 5 months, the loss of revenue,
yes,
personal, corporate, tax revenue, everything, that's going to take a long time to fill that hole. And things aren't normal because of all that lost revenue to the whole world for 3-4 months, right?
Yeah, I mean, exactly. I mean, the same thing I've been talking about, you know, even if it goes up, I mean, you've still got to, just because the market itself is up there doesn't mean the economy itself is back where it was. It has to make up all this that it's, you know, lost here. And, you know, and it's not looking so good. I mean, if we looked at unemployment numbers, if we look back in May, we had retail sales numbers. If we look back in May, we had like a 17% rise, which was great. Okay. Coming off, you know, the shutdowns and everything. Right. And then we get into June, and you know, back in June, it was only a little bit over 7%. That got revised this last month to 8.4%, something like that. But still, you know, basically cut in half. And then we get July's, you know, we were expecting 2% and we got 1.2. And I mean, so you see retail spending falling off a cliff again. And so even though it's you know, it's rising just a bit, nowhere near where it was expected, well off of what it's been doing, you know, the last 2 months before that. And so you look and you go, okay, well, if spending's down so much, then why do we expect the economy to, you know, to continue to get better? Again, you know, in order for the economy to do it, you need velocity. You need people out there, you know, expanding credit, getting more credit. You need them spending money, and we're not getting that.
Okay.
So
what do you think the first wave down will take us down to if we peak here this week?
If we peak here, I mean, if we're peaking here, I mean, this area, remember we were talking about this red line here last time?
Yeah. Yeah.
And I'm still looking at that. I'm still looking maybe around that area there would be
3,000.
that first decline.
Yeah. All right. Can we move over to the dollar? One of our attendees is interested in the Dixie.
Yeah, sure. Exactly. I've been talking for a while now about how the dollar is what's going to control it there. We're just looking for the move down. Is it done yet? I'm not sure. It's possible it's done. It's also possible this is a wave 4 making a triangle, in which case then we'd have a wave 5 coming down. But, you know, again, I talked earlier about how the dollar bears are so off sides. That I think that if it does drop down for a 5th wave, it's not going to be anything that's going to take very long at all. I think it's going to be a pretty quick move down and back up. And I think
there's some fib levels at your S3 that I have around 91.40 to 60 as a possibility. Maybe we bounce first. Where would you say? What would tell you that the low is in and we're not going to continue lower? What would we have to take out to the upside?
Well, from where we're sitting right now, basically,
94.
It's out here. Let me pull this up here just a minute. Let's see. So if I've got, let me zoom out here a bit more on this chart here. All right. I mean, right now, locally, we'll do that. So we've got these highs right here. I think we've got to get back up above this 94 level here.
Okay.
Just at least to get going at the moment. I think I'm really more interested in this as opposed to specific levels. I think I'm really more interested in this descending channel. This is something for most people that they can easily look at. And I think if you're breaking out through that resistance, I think that's the telltale sign there that we're.
Was that above 96 or so?
From right now, yeah, that'll get us right above 96. Yeah.
Okay.
So basically just getting above this swing low right here.
Okay.
Whatever that is right there. What is that? 96.17 or so.
Okay. So where are you at on the PMs now, Chris?
Oh man. Yeah. So, so let's see. So gold, we've got gold here. And, again, you get a bit of FOMO and everything pushing up, strong drop off down here. I believe we're doing a wave 4 right now with the wave 5 to come here on the first, subwave 5, the first wave down. I think we're at the top. Now there is the possibility that this could be a 4 and we could still have a 5 heading up maybe to 2,300. Right now it doesn't look like it. So we'll continue to watch it. Right now it's still basically in 3 heading up here. I'm looking for a reversal probably around this 1984 area.
Okay.
So if we can get that and then a drop down for 5 there, and then, we'll have another bounce up for 1 and then head on back down for 2. But, for me, we've got to get below this over here, this swing low here at about, what is this here?
1700, 1680.
Yeah, it looks like right about 1700. Let me see. Yeah, about 1700.
Okay.
Because I've got a triangle there as the X there with that E. So if we can get below that, to me, that kind of says, tops in. But I believe
I was kind of thinking maybe we went down to 17 and then made a run at new highs. Is that a possible count? Not really. It's okay. You can do.
No, I mean, I can't ever say anything's not possible.
That is true. That is so true.
But,
everything can happen. Yeah.
But I think if we're getting down there, I think I think once we're really getting down there to 1700, I think you're really kind of pushing it for potentially a reversal of some sort.
Okay.
Yeah. So, I mean, for me, again, I've been talking to you a few times before. This is all part of that much larger count I've got here, which you see here, that count that everybody hates. I can't mention it without getting a lot of hate mail. But, basically gives us this big correction off here. And so it's just an expanded.
Oh, that's an irregular B at new highs.
I'm sorry?
It's an irregular B at new highs.
Yeah, exactly. Basically, you've got an ABC to down and up.
Okay.
Yeah.
All right. I won't tear your head off on that. But I've seen irregulars, and they really, irregulars really cross people up because they make new highs and lows, and they're usually considered breakouts when they're just corrective. So, interesting looks. What else is on your radar? Do you have a view on yields?
I don't at the moment with me.
Okay. All right.
I mean, we can take a look at silver real quick.
Okay, silver's cool. Bitcoin's making new highs up here.
Yeah,
today.
Bitcoin's doing its thing. And my thought here, again, here's silver. Silver, same idea as gold, though I think we've got a 1 and a 2. I think we might be working on a 2 here. And so, again, the same idea. It could potentially, head up here maybe to around, 31 or maybe even 33. Those are the ones I'm looking at the moment, immediate. But, what we've had already is we've had this drop back down over this swing high here, which kind of suggests that this is a 3-wave corrective. We just want to see this kind of roll over and head down now. But, we've got
nice parabola. So,
yeah, exactly.
So if you believe in the parabolic nature of things, once a parabolic move is broken, it's over, right?
Yeah, exactly.
Or could it put in another parabolic move?
Yeah, I mean, you expect at least a 60 to 80% correction off that, off the parabola.
Yeah.
And that basically just gets you right back down into this area here. And so, I mean, minimum, usually that's kind of what we're looking at if that holds.
Okay.
And it seems to be. I mean, again, it's a strong drop on down through it, high volume. Makes a lot of sense there. And so I look at all this and I say, okay, well, we've got, Treasury's doing what they're doing, what you were talking about earlier, as a matter of fact. We've got precious metals here appearing to be, to be making their top. And of course, I'm looking at, a sub 8 level for silver to get to, with my gold, it's sub 900 and silver there, it's sub 8. And so we look at it and we go, okay, well, how could that happen, right? Because, everybody's thought is, oh, the government's printing all this money, which again, QE is not what they think it is. And so, it's this idea that, again, we get to the point where people are scared. Like you said, the people with the wealth, they're not out there blowing all this money. They're concerned. They're worried. They want some confirmation that things are going to be okay. And
they're hiding out in the Hamptons until after Labor Day.
Okay, the rich don't stay rich by making silly mistakes.
Yeah.
Yeah.
So, okay. So you want to wrap it with Bitcoin? You're probably looking for a top in here, is my guess.
So if we jump on over here to Bitcoin, let's see here. What do we got here? So we've got this push up, and there's been a few counts we've been looking at. I'm still of the thought that we're going to get down to sub 3,000. But this here may actually be an X is what we're looking at. So this has the possibility to run up here around 14,300 or so, maybe.
Mm-hmm.
And that might give us an X, and maybe even up towards 16,000. It just depends on how crazy people kind of get in there and FOMO in.
Right.
And I think it's all just a product of what's going on with the dollar there. I think, if the dollar's rising in value, there's no reason to buy Bitcoin. There's no reason to buy gold. There's no reason to buy silver.
Well, why do crypto people say that Bitcoin's a deflation hedge?
Oh man,
they do, don't they?
You know what? I think people that are in
it.
crypto are just looking for any narrative they can get. They, at the end of the day, really all it is a speculative market right now. Everybody's like, oh, this company fundamental, this and that. The only fundamental that really matters in the whole entire crypto space is Bitcoin. Is Bitcoin going up or is it going down?
Because the chart looks like the S&Ps.
Yeah, right. Exactly.
A lot like the S&Ps or silver or any of them.
Exactly. And that's the thing. Everything's going up at the same time and everybody's euphoric and nobody stops and says, wait a minute, this is weird. This shouldn't be happening like this. What's going to happen here? So, I think everybody's going to get caught.
Okay. You want to show your website, Chris, if people want to follow your bearish counts going forward now that we've had massive moves to the upside? If you're going to be right, the levels that are here for certain markets, especially S&Ps, go ahead.
Yeah. They can get in with us here at howtotradetowin.com.
Okay.
And, everything we do is basically starting with education. It's not this idea that I'm trying to shove my thoughts down anybody's throat. As you're well aware, right. At the end of the day, you're the analyst for your money. You've got to make the decisions. The idea here
you don't
is just
click anyone's mouse. You're like me.
That's right. It's just to tell them, listen, this is the way that markets work. These are the things to look at. Now, you may come up to a different outcome than I do, but it's getting that basis under there. So everything we do starts and ends with that.
Okay, my trading warrior brother, Christopher Inks at Texas West Capital. Thank you so much, buddy. Why don't we get back together, after the election and see how things are looking.
Fantastic. I'd love
see
to
if
talk
see if gravity still works.
That's right.
All right, buddy. So I hope you and your loved ones remain untouched. I know you're in Texas. They've been having a pretty rough COVID problem. And thank you for sharing your views with us today, Chris.
Thanks so much, Dale. I appreciate you.
All right, buddy. All right, everyone, that's a wrap. We'll see you tomorrow for Turnaround Tuesday. Don't just count your pips, count your blessings. See everyone tomorrow. Adios. You're welcome, Monica, DJ. See you guys. See you, Chris.
Take care.